Action.
Welcome to episode 26 of Fish Wrap TV. Today is Friday, August 6th. I'm your host, Janie Hansen, filming your weekly market update live from Blue Earth, Minnesota. Here again with Q Lair. Wheat is the big story today, but we'll also discuss China, soybeans, and once again, inflation. Q, what's the latest in wheat?
Well, we had wheat was finally went to the forefront yet again. And it wasn't spring wheat. Kansas City hard wheat has really taken off here, like we've been discussing. And Minneapolis has lost over 80 cents to Kansas City here just in the last month.
Okay.
So that's been the trade of the board for all the grain room, to be honest. And based on what I was seeing at about 1 o'clock this afternoon, Minneapolis is losing about another nickel to Kansas City even today. So what we're seeing is that the proteins are starting to ramp in. The commercials are bidding up the hard wheat to get the trains, and then we're going to see if the 12, 13, and 14s rolling into Kansas City by rail will really take the heat off of spring wheat. So it's one of those things where we are at that stage where were it not for Kansas City having quite a bit of stock on hand, Minneapolis wheat would be well over $10 right now.
Okay.
So, and like we talked about, like 6, 7, 8 months ago, it was 20 under Chicago, and I mean it shot up like whatever. But yet, what happens is Econ 101, high prices cure high prices, and now what they're going to do is dig into the 13s and 14s coming out of the hard wheat and replace whatever they can with the 14s and spring wheat that they need. Mm-hmm. So, having said that, we had some pretty good sized movement in Chicago. It's funny because you get a movement in wheat, which is really fundamentally based in hard wheat, but everybody goes and buys Chicago wheat.
Oh.
So, that's where all the specs hang. And, even though the hard wheat crop is more than double the size of the red wheat crop in Chicago, the futures are 2.5 times bigger in Chicago than they are in Kansas City,
okay,
or just 2 times. But it's kind of funny how that works. Mm-hmm. So, and because the red wheat crop is the smallest of all of them, of the spring wheat or the hard wheat, but yet it it has the biggest open interest, and the most speculation. So very, very interesting. Continue to watch this. If Kansas City got about 18, 17 under Chicago today, you got to realize this thing was $1 under, not too long ago, and now it's 17 cents. So it's really moving against Chicago. It's really moving against Minneapolis. And what it's doing is really working its way into the supply chain for what we're doing, with the proteins.
Okay, and what does that mean for producers?
What that means for producers is that if you thought your spring wheat was going to get really, really stiff this year because of, the troubles we're having up in Canada and northern North Dakota, the $9 board is about as good as it's going to get unless there's something happens. Somewhere overseas, because with all of the hard wheat we've got, if this crop is what I suspect it is, protein wise, we're going to be able to make it through this year pretty much where we're at.
Okay. So, and rumors have it China bought some wheat?
Yes, and that really caught the market with their pants down this week, and that's what really started shooting this market up. So, just a rumor, but yet it's one of those things where it just shows you how everybody's been watching corn and beans and not been watching the wheat, which is very, very deadly to do.
Yeah. So speaking of which, that and more, and the canceling of old crop and buying new crop that we were talking about last week.
And in soybeans, that's what the Chinese continued to do. That pull out the inverse in the bean market, and we're seeing more and more of that. And of course, the bean board is getting weaker and weaker on the spreads.
Yeah, and so corn as well.
Corn, corn is kind of hanging here. $5.50 in these, and the ag Twitter is just all over each other, thinking one way or the other. My guess is we may see $6, but we got a better chance of probably seeing a 4 in front of it based on what's going on right now. The market, I think the market got ahead of itself this year.
Okay.
Because I mean, if you look at, we had the low prices because of, tremendous amounts of stock around and China not buying it, and then China buys it. That isn't what I call a permanent supply chain situation. And, just got to be careful here, because we had plenty, we had very low vol, we had very low means in the frames for corn, soybeans, and wheat for that matter. So it's really, you got to behave this stuff. And, if you're going to play the big game, 2022 is the year you're going to play this thing.
Okay. So, and back to soybeans. What's happening in the market there?
Well, we've got canola continues. I mean, it's like glued to 900 Canadian up there. It broke down to about 850 and came right back. Mm-hmm. We don't know the situation. It seems like some of the other oils are working their way into the supply chain, just like hard wheat's moving its way into the protein channels. So, we're in a situation where we had plenty. That's why the beans were at $8, 10 months ago. So it's one of those things where, if we had a situation like this next year with this, with the carryouts where they're going to be this year, mm-hmm. then you would have beans going to $16, $17, $18.
Okay.
Yes. So it's really, I think all the bulls, you got to realize, we ran this thing from 840, 850, all the way to $14.50, and, greed is one of the big problems.
Yeah.
And if $6 isn't good enough for you, then, we will show you what a $3 break is.
Ouch.
Ouch, indeed. So it's really something. And we're coming into August. This is it for the beans. This is where they fill out. And here in Blue Earth, we got 2 rains in the last 3 days. Illinois is as good as it's ever been down there. And, 2012, Illinois led the way for how bad it was. So, it's just one of those things where, you talk 2012, you better have 2012 actually happen.
Yeah.
Or if you want to talk 1988, you better have 1988 happen. So, this wasn't anything like that, like we talked about, of course. So, having said that, corn and beans are sitting here in this tight trading range. The vol's coming out is putting everybody to sleep. It's going to break out one way or the other big, because it's really building some power, especially in corn. Mm-hmm. It is really building some power in this thing. Beans are down to, open interest is down in beans. So until somebody really gets serious about, making a statement up or down, this thing is going to continue. But at the end of the day, we will know a lot more with this crop tour. Mm-hmm. And, I got a suspicion what we're going to see. So it's really, I think we're going to see things better than we expected, which is bad news for a lot of people. But yet, got to remember, we showed you $6 and $5.50 in corn. We showed you $13.50 to $14.50 in beans. And if you didn't take it, mm-hmm. You're going to love it at 12, I suppose. Yeah. And $4.80, because we've still got that gap below. Mm-hmm. $4.84-ish in the corn. We have a gap in the D's down there. And I mean, if we have to, we probably will go down and get that thing, mm-hmm. or make a run at it, especially in harvest. So, I don't see, the basis, running anymore. Commercials have, pretty much steadied up on the basis. They've got what they need. Supplies are in. They're not totally committed on commitments to traders one way or the other. So they've got plenty of dry powder ready to rock and roll. ADM and Cargill had some of their best years ever, has been the reports, because mm-hmm. of, the crush margins and margins into China. So, they got plenty of dry powder to play this game big time if somebody wants to really get this thing out of control. Okay.
Any other closing thoughts on the grains?
It's still canola. I really don't know where this thing's going. 900 may top it out. And, because we've got sunflower oil, we got safflower oil, we got cottonseed oil. I mean, pick a thing. We got oil mm-hmm. coming out of it, corn oil even. And, it seems like we are, keeping a lid on this thing. But yet, if somebody absolutely has to buy canola, it is going to be curtains up there.
Okay. Well, moving on to the perpetual hot topic of the summer, inflation. The monthly jobs report came out this morning. How is that feeding into the ongoing inflation discussion?
Well, we had about 60,000 jobs. We were looking for 850. The interesting thing was that the private jobs estimate was 707, and we came in at 703,000, which, I got to finally give these guys some kudos for actually getting their estimates right. So maybe they did take the stats course like I've been telling them to. But, the balance of this is government jobs. So I don't know how thrilled people are that, we're 25% of the jobs that we're creating government at this stage, but yet, jobs are jobs, I suppose. Mm-hmm. And people are teasing out, the internals of, race, people going back to work, people dropping out of the job market, all sorts of things. So it's really, Twitter's on fire every jobs report when, people teasing out the pieces of it. As far as inflation, gold broke after this, the dollar continues strong. What we're seeing is that natural gas and heating oil are beginning to become a big problem. Okay. The gas coming out of the Nord 2 pipeline, Russia into Germany, is down 50%. So who knows if Putin's playing games, but they are near record highs for prices in natural gas in Europe. And, that's the thing is that, you get dependent on Russia or China, look out. Mm-hmm. So we see that with semiconductors and all the other things that we're having trouble with on our supply chains.
Yeah, when they throttle down the supply.
Yeah, they throttle that down or whatever. And the thing is, natural gas is, it's this fuel that we're going to use to get to the, renewables, solar power and everything else, because it burns much cleaner than crude oil, of course. But it's really interesting that, we've got $4 plus natural gas now. Mm-hmm. And I mean, I was telling people, it was $1.80 a year ago.
Yeah.
And now it's $4 and heading north. And, of course, you cut off the fracking, you cut off the, all the stuff that we did, plus you close down the Keystone Pipeline, you are going to have pricing issues. And what that's done is, I think the Biden administration, to be honest, is probably the Saudi Arabian business person of the year, because, you've gone from 30, 40 to 70, and all of a sudden their finances are looking much, much better.
Yeah, and the crude oil prices.
Exactly. Mm-hmm. Oil prices at 30 to 40 is a whole world different than 70. So
yeah,
it's just one of those things where, and of course, it's bending back on the American economy, because people are noticing, $3 gas out, across the street over here, and of course, nat gas going, double. But this is not even winter yet. Mm-hmm. So, having said that, the distillates are really going up, which is heating oil. Okay. So, a lot of the Northeast did not get, what I call enough natural gas pipelines built, because they turned them down, and they're burning heating oil, which is a distillate, which is even worse than anything else we burn. But yet the distillate crack is beginning to show signs that they are, this is going to get real expensive.
Okay.
And, this winter. So people, I think, Christmas with the high freight rates, when your toys coming in from China for Christmas are going to shock you. With the 300% freight rate increases. And then, of course, I think the heating oil and the natural gas heating is going to, really shock some people as well, too.
Okay, that'll start hitting some pocketbooks this winter.
It certainly will. It certainly will. That's what we're looking at.
Okay.
And, of course, natural gas, copper, they just keep running.
Okay.
And, copper is they keep talking about that being, one of the key metals in transforming to electric vehicles and stuff like this. And, rumor hit the tape, or actually, I guess news hit the tape today that, China's investing another $2.5 billion in Congo, in that huge cobalt mine that they got going there. Mm-hmm. So, cobalt, whoever thought cobalt would be it, but, cobalt and lithium, are, keys in this new battery storage kind of thing, the game you have to play with this sort of thing.
Mm-hmm.
But, the prices are definitely up. People are bitching about their food prices already. And I can't imagine what it's going to be, 6 months from now.
Yeah.
Because they are going up
Mm-hmm.
a lot more than this. And, the final thing is that, the prices for all of your paper goods and everything else are going up Labor Day. We've already been told that by Procter & Gamble and these guys. So, the prices, the work, everything is going to work its way into that, by Labor Day.
Okay. So for those consumer goods.
Yes.
Mm-hmm.
Mm-hmm.
All right. Any other final thoughts for the week?
No, that's about it. I mean, it's been a hell of a week.
Yeah.
But just watch out for the crop tour coming. That's going to show us the direction.
Yep. Big things, the weather and the crop tour for the grains.
Exactly.
So, well, to hear more about what these market movements mean for producers' grain sales, check out the website, thefarmcfo.com, for this week's Croptimize Hedge Report on the Croptimize Pro subscriber dashboard. Thanks for tuning in, and we'll see you next week.